and Nona Peltier joins me in the studio to talk business. So let's start with the property firm. So it's an Australian property firm, Centuria, and it's looking to make a takeover offer for Augusta Capital. What's it all about?
Yes, it's the second round of hoping to take over the company. So originally they were offering about $2 a share, and but they pulled that offer in January when the COVID emergency began to emerge, and things started to look a bit maybe not quite as well for Augusta as they had hoped. So Augusta, in the meantime, it raised some capital because they needed to shore up their own balance sheet. And at that point, this company, Centuria, took a 23% stake in Augusta during that capital raise. So that's what they ended up with. Now they've made a second takeover offer for the company. This time, all up, they're offering $1 a share. So half-price deal. I'd say it's not, I don't know how I feel.
Times have changed.
What times have changed. So, but, they're pretty confident that the shareholders will like this particular offer. And one of the reasons why is that it's a mix of cash. I think it's 20 cents a share they're going to pay, as well as a part stake in Centuria, 0.39, cents or percent of what their shares are worth. So it's not a bad deal, I guess, when you consider what's transpired in the latter months following the January withdrawal of the takeover offer. It did see Augusta's share price rise 31% today. So they were trading at 90 cents versus just about 64, or rather, 68.5.
Can you read that chicken scrawl, Nona?
I can. 68.5 cents. Well, there's just so many numbers to get through.
Exactly.
But this particular... So anyways, they're kind of hoping that the shareholders will accept this offer. Remains to be seen. But in the meantime, they said, well, heck, we're going to go ahead. We're going to take... We don't know what the future holds for Augusta or any property company. But hey, it's worth a punt. So, maybe we'll see what happens.
Okay, so services sector, downturn, right? Revealing the depth of the current recession. So we're probably not surprised by the downturn, but how bad?
Well, we talked about the performance of manufacturing index on Friday. Today, we're talking about the performance of services, and it's really just as bad as the manufacturing sector. And maybe in a way, a little bit worse, because a lot of the growth that we've seen in the services sector, that's, restaurants and meals out, that kind of thing. It shows that there was a lot of spending, but that was more pent-up demand following the lifting of the lockdown. Whether that is going to carry on or not, they're not suggesting that it will. In fact, they think that given the numbers that we're seeing today, that the combination indicates the second quarter of this financial year, so right now, for the period ending June 30, that our economy probably has shrunk 19%. That's 19. That's a startling number, really. Yeah. When you read those, and that's the thing about these numbers, they seem almost surreal. Like you sort of, like this morning we had the latest house prices and, a slump in the number of sales, like 49.5%. And that was off 119% drop the month before that. So, these are numbers that we don't normally report on, and just to even provide some context for them is difficult. You wonder what will happen in future years.
We don't even know the trend. We just know what the here and now number
exactly.
shows us.
That's what. So that's very tricky. Now, meanwhile, so our NZX Top 50 Index, believe it or not, it only fell 0.33% with all this bad news today. 42 points to 10,864. Now, that's in contrast to what we're seeing in Asia and in Australia. So Australia's market was down. Last time I looked, 1.75%, and that's in line with what we're seeing in Asia, because there's rising now concerns about the resurgence of the virus in China, and that has put the damper also on the New Zealand dollar and the Australian currency, which was making news in Tokyo today that they both fell because of the increasing risk. So when the world becomes worried, the New Zealand dollar, the Australian dollar are seen closely associated with China. So as China goes, so do we. And so as a result of that, our dollar is trading at 64.1 US cents and 94 cents Australian and 51.2 British pence.
Thanks, Nona. Nona Peltier with our business news.